What is going on, YouTube Familia? Welcome to a brand new video. If you clicked on this video, that means one of two things. One, you are one of the 40 to 50 people that watch every single one of my videos. Or two, you want to see a Yeti stock analysis video. And that's what we are going to be talking about today. But first, drone transition. Yeah.
You need to lend a helping hand when you wake up. Just know that we're always there.
Anyway guys, like I already mentioned, we're going to be doing a Yeti stock analysis in this video. You ever see this product that everyone has and all of a sudden you're like, I wonder if this company's a public company. I should look into this company. This stock could be a winner. That's kind of like the eureka moment I had the other day when I first started to look into this company, starting to do research for this company. So hopefully you guys do enjoy this. Hopefully you guys do get some value out of it. If you do, make sure to smash the thumbs up button. That really helps the channel grow, really supports this channel. Also, remember to subscribe if you haven't already. So turn on the notifications so you don't miss any future uploads. Anyway, I'm sure almost everyone watching this video has a pretty good understanding of what Yeti is and the business model behind it, because it's a pretty simple business model to understand, but we are going to go over it briefly anyway. So Yeti's product portfolio is mainly comprised of three different categories. The first one is coolers and equipment, which made up 41% of their net sales in 2020. This category includes their hard coolers, soft coolers, storage bags, and outdoor living. Starting off with the hard cooler subsection here, they have 5 products, which include Yeti Tundra, Yeti Roadie, Tundra Haul, Yeti Tank, and Yeti Celio. For the soft coolers, they have their Hopper product, which is really designated to be leak-proof, and it does provide more superior durability and ice retention compared to other soft coolers that are out there. The products in the soft cooler category consist of the next generation Hopper M30, Hopper Backflip, Hopper Flip, Day Trip Lunch Bag, and Day Trip Lunch Box. Then as for their storage bags and outdoor living subsection here, they do have products that include Panga Submersible Duffel Bag, Loadout Bucket Panga Backpack, Crossroads Backpack, Crossroads 2, Camino Carryall, Honda Base Camp Chair, Lowlands Blanket, Trailhead Dog Bed, and Boomer Dog Bowls. Then the second category in their product portfolio is drinkware, which made up 58% of their net sales in 2020. Obviously, you guys probably understand the point behind these products. These products are used to keep drinks cold. The primary products that they have behind this section include Rambler mugs, Rambler tumblers, Rambler bottles, and Rambler jugs. Then the third category they have here, we're really not going to talk too much upon this because it makes up less than 2% of their product portfolio. They do have a lot of other things that they're working on that I'm really excited about that I'm going to touch upon a little bit later. But since their other category makes up less than 2% of their overall portfolio, I'm really not going to go into too much detail about it. However, these products are sold worldwide. They are sold in the United States, they're sold in New Zealand, they're sold in Canada, Australia, Europe, and Japan. And they do sell through both wholesale and direct to consumer. Their wholesale channel did account for 47% of their net sales in 2020 compared to 58% in 2019. This channel did account for $510.9 million of revenue in 2020. And their direct to consumer channel accounted for 53% in 2020 compared to 42% in 2019, accounting for $580.9 million in 2020 compared to $386.1 million in 2019. Now, in my opinion, I'm actually really happy that the direct to consumer channel is increasing, because you're going to see better margins. You're going to be able to take home better profits a lot of the time if you're selling direct to consumer as opposed to wholesaling. And now let me try to put this in perspective really quick if you're a newer investor out there, all right? So let's say that you go to Yeti.com and you buy a cup, you buy a cooler, whatever it is, you buy something, all right? That money that you paid Yeti directly can go right in their pocket, and in theory, they don't have to pay anyone else. In theory, obviously there's more to it than that, but for this example, they don't have to pay anyone else. That money is theirs. Now, let's say you go to Dick's, Walmart, REI, whatever the case may be, you go somewhere else besides directly to Yeti to buy whatever Yeti product that you're buying, okay? Well, do you think Walmart is going to let Yeti just keep the product on their shelves for free? Do you think Walmart is going to allow Yeti to sell those products for absolutely nothing? No. They're not. Walmart is going to want to take a chunk of that. And I really thought at first I wasn't sure how this direct-to-consumer channel progressing like that was really going to affect the company over the long term, because at first I thought there might have been some pull-through due to the pandemic last year for the numbers in 2020, and I really thought that might have been the reason their direct-to-consumer business had accelerated so fast. But after listening to the conference call, reading the transcript, and really looking into it, and based off of where e-commerce is going all the time and the guidance that was provided in that conference call, I really don't think there was that much pull-through, and and I actually think there's a lot of growth ahead for this direct-to-consumer, for this e-commerce side of Yeti's business. Anyway, getting back on track here, some of the stores that Yeti wholesales from includes Dick's Sporting Goods, Lowe's, REI, Bass Pro Shops, Ace Hardware, and Academy Sports. Taking a look at some of the numbers they put up in 2020, they did $1.1 billion in net sales. They took home a gross profit of $628 million bills, and they took home net income of $155 million doll hairs. Now these numbers are really important, and it's really important to identify what I'm about to tell you and really kind of read between the lines here. Looking at their gross profit, first off, obviously their gross profit increased by $150 million, which is obviously great to see. But looking a little bit deeper here, their gross margins improved. In 2019, their gross margins, looking at this statement of operations here, was about 52%. In 2020, their gross margins increased to about 58%. Important. Same with net income. About 5% of that top line revenue was hitting that bottom line in 2019, compared to 14% in 2020.
Super important.
That increase in how much hit the bottom line was really due to the direct-to-consumer channel taking off and the better margins, as well as wiser spending and a couple of other smaller things they talked about in the conference call. But it's important to identify these trends, and it's important to identify how the decisions the management team has been making is affecting the company overall. So now that we've gotten all that out of the way, we've talked about the numbers, we've talked about the business model, we've talked about some of the products they have. I kind of want to do what I normally do in this point of the video, of these stock analysis videos, and I kind of want to talk about some of the things I like about the company and some of the risks I see with the company. This is going to be a more condensed version than we normally do because there is something different I want to do at the end of the video, which you guys are going to see in a minute. But we're actually going to start off with the risks here this time. And the biggest risk I see with this company is execution. Now, obviously execution is a very big risk for every single company. Every company is going to have competition they face, but this is an extremely competitive space. Are they going to be able to continue to expand their product line? Are they going to be able to continue to expand to more countries worldwide? I think both these things are very attainable and very achievable, but it is a legitimate risk. And it sounded like on the conference call, they have a new product line that they're really working hard on that can really change the game, that can be the next leg up for this company. So I'm super excited for that. I really am excited for the future of this company, where it's going to go. But at the same time, if they were to get complacent, that could definitely be the end of this company in this competitive space. Now, that's actually the only risk we're going to be talking about in this video. I know there's more risk with this company, as there are with every company. There's not just one, but that is the biggest one. And like I said, this is more of a consolidated portion, so I really just wanted to pick out the biggest one. We are going to talk about a few more things I like about this company now. The first one being that this company is set up for steady growth. Now, at first, there was an argument, as I already mentioned earlier in the video, that this company could have seen a lot of pull-through due to the pandemic last year. However, after listening to the conference call and really doing a deep dive and listening to their guidance and running some numbers, I really don't think there's any pull-through that went on last year, and I think this company is still set up for a lot of growth. The guidance that they were given is that this company should grow sales between 15 and 70% this year, which is about where I put these numbers. I could see these numbers even getting up to 20% personally, but that's just me. But I really think this is going to be an absolutely huge summer for Yeti. First and foremost, people have been stuck in their homes for basically a year now for the greater part. But I think this summer people are going to be ready to really, I guess, step outside their comfort zone, let's say. People are going to be ready for things to go back to normal. They're going to be ready to go outside. They're going to be ready to go and travel. Maybe they're going to spend some time with people they haven't really seen too much over the past year. So I definitely think 20% revenue growth is possible. Now, if we look at, say, 25%, that gets to kind of the range where it's like, is it possible? Yes, but that's more towards the side where it's like, all right, that's like best of the best case scenario. But analysts do have Yeti growing with a compound annual growth rate of 20% over the next 5 years. So I personally think, after running my own numbers, looking into this company and doing all this research, 20% is in the realm of possibility and realistic realm of possibility for Yeti in 2021. Now, moving on to the second thing I really like about this company is that this company is much more than a drink company. Now, I will admit, when I first started looking into this company, I really thought that Yeti was just a drinkware and a cooler company. I didn't know they had all these products, and they actually have a lot more. They have backpacks, they have suitcases, they have chairs. They have a lot more than just drinkware and coolers like I initially thought. I also like how they're really expanding their product line. I'm very happy to see that. As a potential investor of this company, I'm not buying the stock yet, which we are going to get into in a minute, but I am very happy to see that, and that's very, very awesome to see them expanding product line like that. On top of that, they said in the conference call they're very excited to expand their bag category, which is awesome. And they also said, and this is very important, they also said they think that the bag category can be the largest category that they have been in, which is really, really reassuring to see. And I'm excited to see what they actually actually do with this bag category. They didn't talk about it too much. It didn't sound like they could go too much into detail on it because maybe they're in the early stages of it, but I'm really excited to see where this bag line that they are working on supposedly goes over time. And the last thing I really like about this company is it's a sticky product. So what do I mean by that? Look at it this way. Let's say you have an iPhone, right? That iPhone falls in a pool, falls in a puddle, it falls from a 30-story building. The point is your iPhone broke. What are you going to do about that? You can't fix it, it's not fixable. What are you gonna do about that? You're gonna go buy another one, right? That is how I view Yeti and its products. So look at it this way. Let's say you lose your Yeti. What are you gonna do? You leave it at the beach, you leave it at someone's house, it gets stolen. The point is you lost. You're probably gonna go buy another one, right? Same with the cooler. Say your cooler gets lost, wherever happens to the cooler. I don't know how you lose a cooler, but let's say you lose a cooler. What are you gonna do with it? You're probably gonna go buy another one, right? I can see people, I don't know how often I'm gonna see people losing chairs or coolers, but I can see people losing Yetis a lot. I can see them leaving at the beach. I can see them leaving at work. I can just see them putting it down and it getting taken, or God forbid, you know, obviously you don't want that to happen to anyone, but I can see things like this happening. And I really think when it does happen, and it might happen a lot this summer, especially with people continuing to go out, people are really just going to put more money back into Yeti per se and just buy a new Yeti for themselves. Now, I know I didn't go into much detail in that section as I normally do in these type of videos, but I really wanted to leave some room for this, and I really think this is going to bring some more value to some newer investors out there that maybe are trying to run numbers or are just looking into their first couple of companies, whatever the case may be. So as of right now, I'm not buying this stock. I really like this stock. I wouldn't mind getting involved with the stock if the price is right, but as of right now, I'm not buying this stock, and the main reason is I don't think the company has enough upside for what I am looking for. As for where I see this company, this stock price is around $84 right now. I'm not sure exactly where it's going to be by the time you guys are seeing this, but at the time of me filming this, it is around $84. I checked it right before I got in front of the camera. So in 2021, I actually see this stock price going to $100 per share or around there. Now, am I making any sort of trading decisions based off of that? Am I trying to get in and out of it and turn a quick profit? No, I'm not doing that. I'm just making strictly business decisions. But if we're sitting here and, you know, 8 months and this stock price is at $100 a share, I'm not gonna be surprised in the least. Now, looking a little bit further out, looking more like 2025, 2026 area, I personally see this stock price going to between $160 and $170 per share. So kind of like about a 2x to where it is right now. So now you guys might be thinking, why aren't you buying this stock? Because you guys know my philosophies. When I buy into a stock, I really want to double my money, or at least double my money within the next 3 to 5 years. That's my goal when I get into a stock, to buy an undervalued company that I think has the potential to at least double my money, or 3x or 4x, whatever the case may be. So why am I not buying this stock if the stock price is currently at $84 a share and it has $160 to $170 upside, I personally feel like? Well, first off, I'd like a greater margin of safety than what there is now. So as of right now, Yeti, obviously, as I've already said, is sitting about an $84 a share or so. So if everything plays out according to plan, then yes, I will 2x my money. But what if I'm a little bit wrong? What if it doesn't hit this $160 or $170 price target that I think Yeti is going to hit over time? Then obviously I'm not going to double my money. Remember, the name of the game is to find undervalued companies that have a lot of upside and a lot of growth ahead of them, not fairly valued or slightly overvalued companies that have upside ahead of them. Second, a lot of the stocks that I own have been getting hit recently in the short term, like a lot of stocks I'm sure you guys own have also been doing, since this market's a little weird right now. But if I'm going to buy into Yeti, I have to ask myself 2 things. 1, does Yeti have more upside than any stock in my portfolio? And 2, does Yeti have less risk than any stock in my portfolio? Then taking those things into consideration, I can find a common medium between the 2 and ultimately get out of one of my positions and get into Yeti, so that way I'm not too over diversified. You guys saw me do this like a month or so ago with Beyond Meat. I found a new stock that I felt like had more upside and less risk, so ultimately I sold my Beyond Meat shares and I put my money into this new company. Third, if I'm buying this stock today, if I'm buying this company today, I'm paying about a $7.5 billion price for this company. Now, when I buy a stock, I try to look at what I am paying for the entire company. I'm not looking for the $84 a share. I'm looking at what am I paying for the entire company? What am I paying for the market cap? Which this market cap right now, at the time of me filming this, is around $7.5 billion. And for me, based on all the research work I've done with this company, I find that to be a little too rich for my blood personally. So what I want to try to do for this is I want to try to find out the true forward PE of this company. That's my favorite metric to use. That's a lot of people's favorite metric to use. I personally think this is the best metric to look out there, but I really want to find the true forward PE of this company, and that will be my price point to get in at. So to get this forward PE that we're looking for, we're gonna use 2022 numbers because that's about where I really want to find that true forward PE. Now, to do this, we're gonna take the current share price, which is $84, and then we're gonna take what analysts have, which the average analyst expects Yeti to do about $2.74 of EPS in 2022. That I feel like is about right. I feel like it could fluctuate a little bit either way. I could see them doing maybe around $2.90, but I really feel like $2.74 is a good starting point for this. If you guys want to run your own numbers and do your own thing, absolutely, I recommend that. The more power to it. But for this example, we're just going to use $2.74, and I really think that is about right. So doing this calculation where we get $84 for the current share price and divide it by $2.74 of earnings per share, that comes out to about a true forward PE of 30. Now, looking a couple years out, that is a little overvalued in my mind. That's more rich than I would like to pay. So after running some different numbers here, obviously different share prices, I came up with $55 is what I would like to get in at, and I divided that by $2.74 again, and that came out to a forward PE of right around 20, right on the head. So that is where I really like to. I really want to look at and see where I can find the 20 forward PE. And is this company going to be able to grow into that over time? That's what I really like, and that's what I really shoot for. So $55 is the price target I would like to get into Yeti. Anything over that, I think I'm good. The risk reward is not attractive. And if I do get in at $55 and we look again at that $160 price target, obviously that has a lot more upside. That has 3x plus upside as opposed to 2x upside. So hopefully you guys did get some value out of this. Hopefully you guys did enjoy me running these numbers. I don't do that a ton on the whiteboard. If you guys did enjoy that, I can do a little bit more of that. But in saying that, guys, that is going to be the end of this video. Thank you all so much for watching. I really appreciate it. If you got any sort of value out of this, please drop a like on the video. That'd mean the world to me. That really helps with the channel. It really helps the channel grow. Also, remember to subscribe if you haven't already. Turn on notifications so you don't miss any future uploads. Let me know what you think of Yeti down in the comments. I'd love to hear from you guys down in the comments as always. And I will see you guys in the next video.